Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Monday, January the 25th, 2010. Well, a continuation of the first time frame downtrend that the market is in. The previous day established the downtrend with a lower high and a lower low. The day before that, prior to that, was a very small green bodied candle which set the market up for a potential reversal, and that reversal occurred. Having said that, though, the market is trading with all of these very small-bodied candles, which denotes quite a bit of indecision in this market. The bulls and the bears, depending on which side wins that battle between the open and close, are making very little progress, certainly compared to the days of very strong bullishness when the market traded up through the barrier of the top of this flag. So this candle that we have today is a spinning top candle and a candle of indecision. It's not the sort of candle that you'd like to see in a downtrend. So there is a very strong potential for this market to take out the high of the current candle, create a new first time frame uptrend, and trade back up to around this 78.94 region where there was some fairly strong resistance coming into the market. Looking at the bottom of these three candles with small bodies, when the market traded down to roughly around the 78 region, the buyers came in. So there's very strong support down around that level. Quite often when a market breaks out from a pattern, any pattern, then we can have the breakout, and then the market can retrace back towards the upper barrier of that pattern, and then find support around there, and then continue within the direction of the previous breakout. So there is strong potential for this market to create a new first time frame uptrend with a higher high and a higher low and continue trending up. The market is above the cloud, or the Kumo, so that tells us that the market has an overall positive bias, and the market is trading up above the Tenkan Sen and Kijun Sen. We almost have had a crossover of the Tenkan Sen and Kijun Sen. If that occurs, then that would be a sell signal, so there is potential for a sell signal, but it would be a very weak signal if it happens up above the cloud. So some traders might pay attention to that. Depending on other things that are going on with the Ichimoku charts, then it may not be as significant to a trader as they'd like it to be. Looking at the Tenkan Sen, which represents the trend in the fast time frame, it's pointing sideways, and that reflects this indecision in the market. The market is congesting after this fairly fast moving uptrend that we had with a lot of momentum. The Kijun Sen, though, is still pointing up, and that could be significant for this market, and that's reflecting upside momentum. Certainly there's a bit of carryover from this strong momentum here, and probably a little bit of lag in this market. But sometimes when this Kijun Sen is pointing up like that, and we have a bit of a pullback or a bit of a relaxation in the market, the trend will re-exert itself in the direction that the Kijun Sen is pointing. So there is possibility again that the market will continue in that first time frame uptrend. So for this market, the 78 region becomes very important. Very strong support there, previous resistance level. If we have a solid bearish close down below there, then there is potential for continued bearishness. But the high of the current candle is important for a new first time frame uptrend, and the market to potentially trade up to between the 78.60 and 78.94 level.